October or November. Let me see. It's written on one of these, but basically, right? They have the best month over month. Oh, here we go. Yeah. Here we go. September the 30th, 2020 was they reported a short-term cash and investments of 3.3 billion.
Mm.
The next month they hit record sales. And then the following month, there's no real information about what was going on in November. But then in
Uh,
December, they almost doubled like their record of sales that they had 2 months ago.
yeah.
So just in 1 month, and they were predicting, right, that the company's sales, they wanted to go between 16,000 and 500 sales and 17,000 sales
Uh-huh.
in the quarter, right? So for October, November, December, they wanted to have somewhere between 16.5 and 17. Well, in the month of December alone, they had 7,007. So I'm like, you're telling me that y'all needed to sell less than 10,000 vehicles to hit your goal, and you've been doing at least bare minimum 5,000 the last couple months. They're about to smash this. And when they have their earnings in March, the stock is either going to explode or nobody's going to care. There's not going to be any difference. There's no in between. Like it's going to be like a very dramatic move in one direction or the other, in my opinion. So I'm in. I'm in for the long haul.
I'm looking so forward to it. And I'm about to take out some long positions on Neo myself.
Yep. Yep.
Yeah, it's gonna be a nice year. It's gonna be a nice year.
Yes, 100%. I'm so excited. I can't even like. And right now, Neo was up when I last checked, which was like 2 minutes before hopping on with you. It
Huh?
was up like almost $2.50
Already?
pre-market.
So if it's up already $2.50, I think last time I checked it was like 80, I mean 48 something. So that will put it at 50 now.
Hmm.
Nice, nice.
It's yeah. I think it might be at 51.
That's beautiful. That's beautiful. I
Yeah.
can't wait till the market snaps on it
Yeah,
too.
I have some 2022 $50 calls. I'm like, I'm sitting real pretty this morning. I feel great.
All right.
I
So
feel
let's
great.
let's introduce you. Um let's tell the people who you are. So just give us your name and tell us a little bit about yourself.
Cool. So my name is Hunter. For everybody who's new on this podcast who doesn't know who I am, I go by the Wealth Hunter on all of my social media, and I'm 23 years old. Just graduated from college a couple months ago from Pepperdine University out in California, and I was living in Malibu at the time, right, studying and all this good stuff. And like, I don't come from money, but I would see every day when I looked out of my window, I'd be able to see these billionaires racing their yachts on, just right on the Pacific coast. I can hear the Ferraris racing down PCH all morning and all night, and I'm like, there has to be more out there for me. Like, I know I'm getting this degree. I'm a broke college student, but there has to be more to this. Like I'm seeing all these people living their best lives. It's a Tuesday, and there's people on yachts and jet skis living it up, and people are commuting to work. You could see, like, it's just, I was like, there's more to life, but how do I get there, right? So, I had $300 to my name. That was like the entirety of my net worth. This time last year, I don't even think at this time last year I even had $300. I might have had like $100. But shortly after the market crash, I had $300 to my name, which was back then a whole lot of money to me. I was one of those billionaires in my mind with that $300, right? So I'm like, okay, I need to make some stuff shake. I got to figure out, how can I make this $300 like feed me for the rest of my life? What could I do that would, the smartest thing that I could possibly do, right? So all of a sudden, I start seeing a lot of people talking about the stock market crashed. It's crashed. Oh, no, no, no. And people are just panicking and freaking out. And I'm like, you know what? I got $300. Like, well, I'm going to put it into the market, because what's the worst that can happen? I either lose $300 or I become a multimillionaire and I can go move to the Bahamas and wear linen pants every day and have my toes out in the sand, right? So I'm like, cool, let me go ahead and just take a little risk. Well, little did I realize, right, that by me getting involved in the stock market at that time, when the Fed was basically injecting. The Fed is the Federal Reserve Bank, for those people who don't know. They're not associated with the US government, but they have access to our money printers, right? So they're like a world bank. So whenever the bank needs money, what the Fed does, and this is how inflation works, like the bank will call up the Fed and they'll say, hey, we need $4.4 billion by next Tuesday. And then the Fed will say, okay, sounds good. You can pay us back at like a 2% interest rate and we'll have that money to you in time. And then they start turning on the printers and they send over the Brinks truck. And then what happens is you are a user at, say, Chase Bank or JP Morgan is Chase, or Wells Fargo, right? And so you're putting your paycheck in there with direct deposit. They're actually taking your money and they're using it to invest in the stock market, and they're giving you like free pennies off of the tens of billions of dollars that they're making. So, right, the Fed basically said, hey, we're going to pump 9 trillion with a T dollars into the market. And basically at the time it was something ridiculous. Like they were putting in 120,000 $1 million checks, the equivalent, every single day into the market for like 6 months, and no one was talking about the fact. So 22% of all US dollars that are currently in circulation were printed in 2020. And so literally, like I know it's mind boggling, but the market was just flying up. So that $300, 20 days later was $5,500. Long story short, I was making it do what it does. And I'm like, oh my goodness, this is the difference. I have never even held, I don't think, $1,000 in my hand. So to see $5,500, I'm like, yo, this is bananas. And so I was like, yo, I got to teach people about how this works. So I've made it my goal, my passion. I got a degree in political science from Pepperdine, and I don't want to use it at all. I want to just teach people about the stock market because this is the great equalizer. I've seen what it can do. When I was sitting down, listening to a lecture and watching my account go up $4,000, $5,000, $5,500 in 1 hour, I said, oh no, I'm not about to go beg these people for a $14 an hour job and have some boss that I don't like. No, it's not for me. So now I teach people, I talk to people just like this, and Wealth Hunter Inc. was born. My mentor helped me out, and here I am today.
Nice. Wow.
Yeah.
So my next question basically would be, for us new to the market, right? Where would you say our focus should be to basically keep us going from now to carry us on?
Yeah, so that's actually a really good question. One of the things that I focused on whenever I first started trading was I wanted to document everything. So I did. And I literally built a few courses off of it. And basically, the premise of my content has always been, number one, rich people understand what they invest in. You need to be able to understand what this contract says when you purchase it, because all contracts are moved by the same metrics, which are called Greeks, right? I am a firm believer that if you understand your contract's Greeks, you will be successful because you're going to understand how it gains and loses money, and nothing will surprise you. You wouldn't sign a record deal without reading. You shouldn't go and buy a contract without reading. It's the same concept, right? So that's number one. Number two, a lot of these gurus will say, oh, just trade what you love, and oh, it just feels so good. Don't do that. You'll get clapped. You'll lose money. Don't trade what you love. Pay attention to what's going on in the world. Pay attention to what's happening socially, economically, and politically, right? Maybe you're watching the news, whatever, but you don't have to trade what's directly in the news. You just trade based off of what's happening in the news. So for example, right, with the vaccine, when Pfizer got their vaccine approved, and like Moderna and all that, and they were like, oh yeah, it's great. Well, somebody has to transport those vaccines, right? And they said that it has to be kept super cold. Okay, great. So airlines, that's the next logical step. But then you take it a step further than that. Well, after the airlines, deliver the vaccine, somebody's going to have to deliver it to the hospitals. They don't just fly over like in G.I. Joe and drop it with the parachute over it, right? So you look at like UPS or FedEx or whatever. You have to think deeper, like take the information and synthesize it and be like, who's going to benefit from this? Because everybody's going to get a piece of this pie. There's too much money moving around for these big companies to not want a little slice. And you got to just be forward thinking. And then on top of that, right? So you've looked, you understand how to read a contract, you looked at the news and all of that good stuff, and you understand, like, okay, I can see what's going on. Also, I know a lot of people who've had success, me included, paying attention to like heat maps, like seeing what sector is hot. I don't know if you've ever seen like a heat map before of the market, but like you can literally Google stock market heat map and it'll show you like this company was doing really well today. This company was, struggling today. This sector is doing pretty good today. This sector is not. You'll be able to see where everybody's money is at. And if you can see where the money is at, then you're following the smart money. Institutions, if you're following institutions, they only have like 10 red days a year. So if you can just figure out where they're at, yes, these big institutions, they pay all this money, they only have a handful of red days every single year. And that's like, there's 280 some odd trading days in a year. Mm-hmm. So, take that and do with that information what you must. But yeah, that's my best advice. Like, just don't try to make something, don't try to make something out of nothing, and follow where there is volume. That's one of the biggest things too. Not enough people pay attention to it, and I wish that somebody had told me that when I first started trading. Follow where people are. Liquidity is important. Volume and open interest, super important, because if you're there, then there's always somebody to sell to, right? So that's what's most important in my mind, at least, is making sure that you have that volume, that open interest, that liquidity. You can sell your contract and you don't have to worry about anything. Yeah.
Okay. I like that. So what are some free tools that we possibly can use out here to help us?
Oh, yes. Okay, so first and most underrated.
And I hope you guys got your notebooks and stuff, because this information is very, very, very important. So take this down, write it down. I don't care if you got to record it. Do whatever you need, because you're going to need this stuff.
Yes, indeed. Look, check this out. All right. So this, if you can see this little sheet that I've got here, this is actually one of my positions that I was doing some due diligence on.
Okay.
I got this printed off at barchart.com. Mm-hmm. It's a free website. And it allows you can look at anything on bar chart. If you want to see this right here, the reason why I printed it off, it's the historical price of premium for my contract since the first day that it was ever made. So now I'm able to see, okay, if I get filled at, 1,400 or 1,300, I'm getting this contract for about the cheapest that it's ever been offered. And now I'm able to not overpay premium by looking at what's happened in the past. I can also see the implied volatility change over time. I can see how much premium changed. I can see how much volume and open interest have changed over time. This gives me a little bit of an edge. And this isn't the only data that you can look at on there. They have that you can look at anything. You can look at unusual options activity on there. So when I said like volume is important and liquidity is important, they have a free scanner that scans the whole market and says, hey, this contracts at this strike and this expiration date for this company have a volume and open interest ratio of 7-1 or 10-1 or 5-1. So you go in there and you can see that the stock is about to start flying or it's starting to fly, and you can get in and ride that wave because it's giving you that information like, hey, there's a lot of volume, but the open interest isn't quite as high. And for those of you who don't understand liquidity, just to drop a quick gem in here, because this is what really changed my trading as a rookie. Liquidity is the single most important thing that I pay attention to. When I'm looking at plays, when people send me their positions, I do not look at a single thing. Like, I'm looking at volume and open interest first. And when those two things are referred to at the same time, it's called liquidity. And the reason why we care about liquidity is because of two reasons. Number one, volume is a daily metric. It's going to reset to zero at market open. So in about, an hour or so, like less than an hour, 45 minutes-ish, right? The market's going to open. All the volume on all the contracts is going to reset to zero. because it's a daily metric and it's a new day. So when you're first starting and looking for plays in the morning and you see that it has low volume, don't trip. That's just because it has to build up over time, and it's going to be at its peak at the end of the day. And volume is telling you how many people have exchanged a contract on the day. So if I gave you this contract, that's one in volume. So it keeps getting exchanged. You give it to your mom gives it to your neighbor, and all this kind of stuff, right? That's volume. Resets is your every day. Open interest, however, is saying that you bought this contract, right, from me, and you're holding on to it, and it's in your portfolio. Open interest is saying just that. It's saying these are how many people or how many contracts are currently outstanding that people put their money up to have. Like, they are holding it in their portfolio right now, which is why I really like looking at open interest, especially on long-term plays, like the play that I'm in right now that expires in 2022 for Neo. Because, right, if I see that there's open interest of 7,000, right? Why do 7,000 people find, or it's either one person with 7,000 contracts, that means that they're really convicted, or there's 7,000 people with one contract or some derivative of those numbers, right? Why do so many people believe in this enough to put up the money to buy it? That's why I pay attention to open interest. Volume in 2022, I'm not going to lie, it's not really all that sexy, right? To be trading in 2022 and getting those slow gains. They're big gains, but they're slow. So open interest is super important. And when you can see that your contract has liquidity, it says, hey, I'm not the only person that's seeing this value here. And I'm looking along the rest of the options chain, right, at all the other strikes. Speaking of which, one last gem to drop for you guys that I wish someone had told me when I first started trading options. Stocks have natural support at multiples of 10. So if you choose a strike that ends in a multiple of 10 or that ends in a 5, you're going to have more volume and open interest there. There's more liquidity. If you choose a strike that's like 105.25, it's not going to have as much volume and open interest. And I'm not Raven Simone, but I can tell you for a fact that if you open up right now, any option that has a strike that ends in a crazy like 108.75, that's not going to have nearly as much volume and open interest as the 105 call or the 110 call or the $100 call. At the round 100, you're going to find a whole lot of people gravitating there. So just a little bit of game to put y'all on. It makes it so much easier finding a contract that's gonna help you out, make you win, at least in my estimation.
Okay.
Yeah.
Got another question. All right. So since we're talking about options, right? Could you explain how to calculate your profit on options? Because I'm still a little fuzzy on that. The numbers move so fast, and it's like, okay, wait, how did I get here from this?
Absolutely. So when you buy into an option contract, right, you're going to pay this thing called premium.
Mm-hmm.
And your premium is basically, it's telling you the intrinsic, if it's an in the money contract, right, the intrinsic and extrinsic. But if it's just out of the money, it's just extrinsic value. And extrinsic value consists of time value and volatility value, right? So you say, okay, well, what Greeks, affect that? Well, time, the Greek that affects time is called theta. So they start with the T. This is the thing that I appreciate about the Greeks. There's an alliteration for each of them. And so option contracts are inherently depreciating. They're always losing value. In fact, you are quite literally racing against a clock for your position to get to where it wants to be. It's all about beating the clock. Okay, so you are going to be losing whatever that theta is on the day, right? That's how much money you'll lose. And the closer that you are to expiration of your contract, the larger your theta is going to be. Vega is implied volatility value. So with a 1% change in implied volatility, your Vega is going to either add to or subtract from your gains. So theta is time contingent, Vega is volatility contingent. Then we have our price contingent Greeks, which is delta and gamma. And it would take, I teach this stuff really in depth in my Options Olympus course, but to keep you from falling asleep, sitting upright at your computer, basically what you need to understand is that think delta dollars, okay? So delta dollars, delta is going to tell you how many dollars you will make on that contract based off of a $1 move in the stock share price. So, like for example, my play that I'm in right now, the stock is up $2.50 pre-market. My delta is $67.79. So that means bare minimum when this market opens, I'm looking at $120 instantly. And that's without factoring in Vega, because there's going to be a huge influx of demand. And that's without factoring in Delta's best friend, which is Gamma gains. So what happens with Gamma is the rate of change of your Delta. So after the first dollar that the stock goes up, your Delta is actually going to change. And when your Delta changes, it's going to either get larger or smaller. And the only reason that it's going to get larger for calls is if the stock is going up, right? Because it's rewarding you for being correct. For puts, there's an inverse correlation with the share price, which to save you the boringness of it, stock goes down, you make money. Stock goes up, you lose money, right? So your delta would get smaller for your puts. That's why puts are losing money and you see negatives for the puts, but you see plus signs for the calls because the stock is moving up. Calls are being rewarded. They're getting their larger deltas. Well, gamma is pouring into, when you're correct, and taking away from the size of your delta, depending on the movement of the stock. If it's wrong, right, then it's going to make your delta smaller and smaller. So that's how your contracts gain or lose value. You got your price contingent Greeks, delta dollars, gamma gains, right? Then you have your time contingent Greek, which is theta time decay. Then you have your volatility contingent Greek, which is vega volatility. And then you have the redheaded stepchild rho, which only has to do with interest rates. Nobody really cares about rho. If you know nothing about interest rates, it's totally fine. And plus the Fed has like cut interest rates, so it doesn't matter. So yeah, rho you don't deal with on your day-to-day basis, but delta, gamma, theta, and vega, very important day-to-day. I hope that kind of answers your question a little bit.
Yes, it does. Yes, it does.
Cool.
So from there, basically, I have no more questions. The floor is yours if you want to tell everybody anything else to share any more information.
Yeah, for sure. Okay, so I actually have been, this is kind of, I have never told anybody this just yet, but what I'm doing is I'm going to start basically a week-long fully immersive boot camp on teaching people how to trade options. I literally this has been in the process since August, maybe even like the end of August, early September. I have a whole Google Classroom built with quizzes, with tests, with homework, with video content to consume, with articles and all this good stuff. And I'm actually trying to take on 100 students and literally just break through all of the basics of options trading, and just teach like a fully immersive 1 week long, like I'm gonna be on here for the whole entire trading day, excuse me, and just teaching people everything that I know and dumping all this information into them, because I think that it's so important. And this is about to be a really crucial time. We're about to really see a strong bull run as we get a transition of power in our government, right? So that's going to happen in like the next couple weeks. So that's going on. I'm also about to be running a sale, literally, if not today, then by tomorrow. My simplified beginner guide, where I teach all of this stuff in depth, is going to be on sale for $30 as opposed to where it normally is, which is $50 right now, but I think I'm going to beef it up to about $75 pretty soon. So if you are watching this, let me know and I will make sure to keep that promo code alive for you guys. Whether or not it's been 24 hours, just send me a message and say like, hey, I was on the podcast, I heard you talking about it. And then last but not least, before you just hop in and take this information and run with it, make sure that you have a strategy in place. Like whether or not you're learning from me, that's you can do what you want to do. I'm not going to be like, oh, only my stuff works. But find what works for you, because what works for me doesn't work for everybody. I'm not a super huge math brain. I really try to make things as simple as possible. Some people hate that. Some people want to be as technical and down to the penny as possible, and that's fine. I love that for you. But find something that works for you, and stick with it, and work on developing that craft, because a lot of people will get intimidated because people in this space are really aggressive about the way that they trade there. It's like a sense of pride. Don't let emotions get to you in this space, and don't let somebody tell you, just because your strategy isn't the sexiest and you don't have 400,000 indicators or whatever on your screen, that you are incapable. I was making money long before I knew all the things that I know now. But it was only because I was persistent, and it was only because I had that tenacity. I was like, I'm going after it. I'm going to get it, right? And you guys can too. So don't let people bully you out of this space. Don't get intimidated. Don't lose your confidence, because it's important to be able to stick with something. You're going to have moments where you want to give up. I can't even begin to tell you how many I've had. Probably in the last 2 weeks alone, there's probably been a few. So like, you just have to keep pushing through. You're capable of doing this. You're smart. So don't give up. Find what works for you. Develop a strategy and attack the market, and be ready to adjust, because no strategy works 100% of the time, all the time. But just keep taking in information. Always be a student, and it's going to be hard for you not to find at least a little success. So that's all I got for y'all.
All right. So how can people reach you?
Oh yeah. So on any of my social media, which right now I think I have a TikTok, but I don't really like use it. My friend made it for me. Um, at the Wealth Hunter. That's my username. So if you want to find me on Instagram, that's at the Wealth Hunter, and Twitter at the Wealth Hunter. And like, I'll occasionally, when I'm not, wilding out and having fun on my social media, I will be known to drop a gem or two about trading, or just wealth building in general, things that I've picked up, and like learned while living in Malibu. So yeah.
All right. And all links we will add to the bottom of this, so that way you guys can just click on a link and get to it. Even her classes and everything, it will be there for you guys. All right. So thank you. This was definitely powerful. I know you guys definitely should appreciate this. She came on here this morning, started dropping gems. I mean, look, take them gems and run with it. You know what I'm saying? Look, once you got the gem, can't nobody take it from you. So do what you can with it. Look, thank you again. Thank you again.
Yeah.
Definitely appreciate it.
It's fun. This was a great start to my morning. I'm up bright and early. I feel good. I'm like, my energy's flowing. I'm ready to go kill it.
Yeah. So look, you guys have a blessed one. We're gonna stop here, guys. And look, it's all about investing in yourself. You start here, you know what I'm saying? Invest in you before you make any investments in anything. It all starts with you. Guys, have a good one. In closing, want to say anything? Say bye to people.
Yeah, guys. It's been such a pleasure getting to talk to y'all this morning. And please don't be a stranger. Like, reach out to me, DM me. I'd love to talk to y'all. So, don't think that like you can't ask me questions, or, come chit chat. I love it. So way to invest in yourself. Like you were saying, like, way to be proactive and change the trajectory of your financial future. That's awesome. And if nobody else has told you, I'm proud of you. Way to go, guys. That's some seriously good work. All right.